it's Democracy Day commemoration in Nigeria. So it's a good time to say Happy Democracy Day to our viewers in Nigeria. Welcome to Business Morning. I'm Ini John Mekwa.
Thank you for joining us. I'm Ladi Williams. You're welcome. Over 2 decades of the unbroken democracy is worth celebrating, and it's also a great time to take stock.
And that's what the president did, President Muhammadu Buhari, with his democracy speech on Saturday. He reeled out some of the achievements of his administration in the last 6 years.
And he also reiterated his commitment to tackling insecurity in the country and also address issues of poverty and youth unemployment by boosting the agriculture and manufacturing sectors, among others. Do take a listen.
In the agricultural sector, for instance, the Anchor Borrowers Program resulted in sharp decline in the nation's major food import bill from $2.23 billion United States dollars in 2014 to $0.59 billion United States dollars by the end of 2018. Rice import bill alone dropped from $1 billion United States dollars to $18.5 million annually. This initiative, supported by local production of rice, maize, cotton, and cassava. Government financed 2.5 million smallholder farmers cultivating about 3.2 million hectares of farmland all over the country and created 10 million direct and indirect jobs. In the manufacturing sector, the Central Bank of Nigeria, Bank of Industry, 200 billion naira facility financed the establishment and operation of 60 new industrial hubs across the country, creating an estimated 890,000 direct and indirect jobs. The CBN's 50 billion naira textile sector intervention facility increased capacity utilization of generators from 30% to nearly 90%. The Economic Sustainability Plan, our rebound plan for the COVID-19 pandemic, developed in 2020, is currently being executed. The plan is primarily focused on the non-oil sector, which has recorded phenomenal growth, contributing over 90% to the GDP growth in the first quarter of 2021. Though marginal, we have recorded GDP growth over 2 quarters, second quarter of 2020 and first quarter of 2021. This is evidence of a successful execution of the Economic Sustainability Plan by the federal government. My vision of pulling 100 million poor Nigerians out of poverty in 10 years has been put into action and can be seen in the National Social Investment Program.
That was the President of the Federal Republic of Nigeria, President Muhammadu Buhari. Well, like he noted, his inauguration as the President of the Federal Republic of Nigeria 6 years ago was greeted with a lot of optimism given the state of the economy at that time and his promise to revive the country's economy. However, 6 years down the line, the question on the lips of many is, has Nigerian economy improved better than it was 6 years ago? Well, in this our next report, our business correspondent, Chimezie Obiwagu, explains and examines the performance of the Nigerian economy in the last 1 year.
That President Muhammadu Buhari inherited a frail economy is not in doubt. Despite that, the nation's economy, which recorded a growth of 6% in 2014, has been on a downward slide due to some external and internal factors. The last 1 year can be described as the most challenging for the present administration in its 6 years in office, and thus no thanks to the global pandemic that has ravaged the world. Before COVID-19, the Nigerian economy had been projected to grow by 2.1% in 2020, but that did not happen. Instead, the economy plunged into a recession for the second time in 5 years. This was largely due to the fall in prices of crude oil on account of falling global demand and containment measures to fight the spread of COVID-19.
In terms of response to COVID-19, they followed the advice that most of us analysts gave at the time, that we should have a clearly articulated stimulus, package, but also to ensure that that stimulus package is not just any amount brought up arbitrarily, that it should be a minimum certain percentage of the GDP of Nigeria in 2019, because that was the pattern governments all around the world did it. So eventually they did that. Also, in responding to the economy when it went into technical recession by September 2020, it also was very good in terms of the plan that the government came up with, which also is the typical, we call it the textbook solution to dealing with recession. Because the real challenge there is not allowing recession to go further into a slump. That means you want to ensure you shunt the economy from recession to recovery, which of course they also achieved.
The bad news, however, is that the year 2021 so far is not showing much deviation from the previous year, given the leading economic indicators. The first quarter GDP data shows the economy is still anemic. Nigeria's debt stock is up by 20%. Unemployment rate is at an all-time high of 33.3%. Although the inflation rate moderated in April, Nigeria's inflation level still put the country amongst the top percentile of African countries with the highest level of inflation.
The fact that you exited a recession does not mean that you've got anywhere near what we call optimality. The economy is still performing suboptimally, and because potential GDP is going at about 8%, while real GDP is still coming at almost below 1%.
Beyond COVID, many expected the government to fast-track the implementation of its homegrown economic sustainability plan. But the proxies which validate or repudiate the direction of the leading economic indicators leave less to be desired. The management of the country's foreign exchange market in the last 1 year has been of great concern to many. The oil and gas sector, which is the country's main source of revenue, has also been a source of concern over the government's deregulation program, which has left many more confused, particularly in the management of petrol prices.
We have seen some interventions on the part of the federal government, the economic sustainability plan. But in most of these, there is always a gap between what the plans are, what is documented as policy, and what actually is the impact that we feel. We had a great deal of issues with the policy environment, with the regulatory environment. For instance, the foreign exchange policy environment was quite a major challenge, especially for businesses in the last 1 year. We had serious issues with forex liquidity in the foreign exchange market. We had serious issues with the depreciating currency, and all of this also contributed significantly to the pressure of inflation that we have had in the last few years.
But is there a light at the end of the tunnel in all of these?
I won't be as bullish as to say that there's a flashlight coming at the end of the tunnel, but I do know that there are flickers of hope at the end of the tunnel. Why do I say this? I say this because, one, the growth trajectory in the second, third, and fourth quarters are going to be much higher than that in the first quarter. Two, the momentum, what we call growth momentum, would have kicked in. However, there's a caveat. If for any reason, and we hope not, that we have a second wave of a viral infection like what happened in Brazil, South Africa, and India, we could have a situation where the growth is stalled. And the last thing we need at this point is a stalled growth. We need a stalled growth as much as we need a bullet in our heads.
Meaning the country cannot afford a stalled growth at this point. Time, they say, is of the essence. All eyes are now on the country's policymakers. Their actions over the next couple of months will determine if Nigeria will join the League of Nations that have successfully turned their economies around after the COVID-19 pandemic. Chimezie Obi Wago, Channels Television News.
All right, now, for a further look at the state of the economy, we are being joined by Professor Akpan Ekpo, a professor of economics and public policy at University of Uyo, Akwa Ibom State, and the chairman of the Foundation for Economic Research and Training in Lagos. Professor, thank you for joining us on the program. Good morning.
Thank you very much for having me.
Great to have you. Well, what a difference, 1 year can make. At this time last year, the price of Brent was approximately $40 per barrel, but now it's trading at record highs. Fast forward 12 months after, Nigerian economy has recorded, mild growth, about 0.5%. Give us your assessment of the economy so far.
Thank you very much. Let's be honest, the economy has not done well in the last 1 year, even more than that. The economy is still what we call a state of stagflation. Okay? We've exited the recession technically, 0.11, then 0.51 or so, 50. Those are very sluggish recovery. If you put that against other fundamentals, like unemployment rate is very high, 3.3%, for youth 40% and rising. Inflation averagely 20%, for food even more than that. Productivity is not good enough. Once you have any of those two, you're in a state of stagflation. Okay, so the economy is not doing well. Then when you look at what we call both the discomfort index and the misery index, the misery index I calculated is about 82% or so in Nigeria, meaning that only 18% of Nigerians are living a little bit better. Okay, so you made a point about the oil price that has virtually doubled, but see, the oil price has gone up. We should get more revenue, but we're not buying our oil. Okay, so and that's why you see the attempt to rejig the foreign exchange market. Oil price has gone up, so you expect that we have more revenue, more foreign exchange, but they're not buying our oil. Okay,
so there's no demand for
oil. Yeah, so they are all kept somewhere. So in terms of what we call economic performance index, we're not doing well. We are scoring about 60%, and you have to score like 80% to be doing well. Okay, the economy is not the way it should be. When you say we are growing at those rates, we exited the recession, we forget that the population growth rate is almost 3%. For you to be growing and say you are doing well, you have to grow either equal population growth rate or you exceed that growth rate. Okay, we are not doing that. Now, even if you are growing at a reasonable rate, it has to be sustainable for about 15 years to have a dent on poverty. We've not been doing that, okay? Even years back, when we say 99 to 2008 or so, we grew about 6%. It was just a jobless growth rate, okay? So you have to grow double digit, sustain for about 15, 20 years to have a dent on poverty reduction.
But even the president alluded to the issue of security.
Yes.
And he connected it to poverty,
of course, yes.
Unemployment.
Yes.
But we hear a lot of effort. I mean, like in his speech,
yes.
he did a number of efforts by the government,
yes.
Agriculture, boosting manufacture, the textile industry. So what are we missing? Why do we have so much effort and yet still so much poverty and security challenge?
Definitely. In the public policy space, there are a lot of intervention by government, okay, both at the fiscal and monetary side, as the president said. But why are they not bearing the fruits? The outcome is not the same. For several reasons. First, there's a lot of delays, what we call lags, in how government does certain things. Okay, the lag structure, that's one. Secondly, to be honest, generally, Nigerians have lost trust, confidence in government. You need people to drive this process, okay? Thirdly, these things take time. Okay, if you plant a seed today,
it's been 6 years. Is that not
yes?
Enough time?
You asked me 1 year. Okay, 6 years has taken. 6 years is enough time. So when President Buhari came on board, we had thought that if he doesn't change what happened before him, because in fairness, before he came into power, there were already signs of an economy not doing well, stagflation. There was even a recession on the edge. Okay, he came in and we thought things would improve, right? But he cannot turn around in 4 years the mistake of 16 years. But we should see a trend, a positive trend, which we didn't see. And then come the insecurity question became a problem, okay? Then down the line, COVID came in.
Yeah.
But before even COVID, the economy was in stagflation. COVID came to worsen it, okay? And COVID came to worsen it. Then the sharp decline in oil prices, okay, worsened our revenue profile. So when you put all that together, you cannot say the economy did well. Now you're asking, how come it's taking so long? There are several reasons. First, the type of economic system that we are running, okay, we believe in marginalism. These things takes time, gradual improvement, okay? We're not running that system we are running market capitalism. So when they say they'll be like China, because China moved about 700 million out of poverty, China run a different system, okay? There's a communist party that gives directives, They don't believe too much on the market. When the market works, they allow it. When it doesn't work, they don't allow it. The system here is different, you see. So it takes some time. We are doing what economists call trickle-down effect. That it will trickle down, and it takes time. It takes time. And I believe that in the long run, we're all dead. So people want to seed rapidly, but it takes time. And will it yield the fruit that we know? We don't know. But if people can endure, some people will be part of it. But my argument is that even if you are growing at even 6%, we should not forget that growth is not development. Okay? You can grow and yet you're not developing. Because people don't eat GDP. I don't know whether you get my point. So the president himself, if I remember, even said that the economy is not doing well. I think he alluded to that fact. Okay? Yeah. But there are a lot of policies they put in place. So they have to be more aggressive in trying to implement those policies and then monitor and evaluate how it is being done.
So Prof, when you say they should be more aggressive, I mean, the president outlined that.
Yeah.
Here, we cover some of those events.
Yes,
what do you mean exactly? I mean, in reality, like you said, people don't eat GDP.
Yes.
We hear the other time when inflation figures came out and it was slightly better, people were
Yes.
like, oh, where is it? I can't feel it.
Yes.
So when you
Prices
say
were
more
still high.
aggressive, what exactly do you mean?
What I mean is this, for example, let me give you an example. We have high unemployment, okay? Government said they have created 774,000, is it 774,000
Yes,
jobs?
704, yes,
One
for each
particular
local government
That is
area.
nothing, okay? But being aggressive means that when you're in a crisis like this, okay, it's only government that can build out the system. You employ more people, even if they're not doing anything in the office. You pay
But
them.
government also has the issue of, I mean, income now.
No,
Yes, salary.
Yes.
No, that is part of the problem because we are running the cost of governance is too high. That's one. Something we call in economics expenditure switching. You look at where items are not of priority and you move them around. We don't do that. For example, Nigeria, and I think they're doing that now. We are the most under-policed country in the world in our cities. You employ people into the police force, security agencies. That way you are creating jobs, okay? Because private sector will not create jobs if they cannot make profit, no matter the incentive you give them. Okay? It is government. Then again, very important, you put in place, it will be long term, a check on population growth. You have to put a check on population growth for a while.
Reminds me of China.
Yes, and you monitor it.
What kind of policies?
After a while, you can because you see, the rate we are growing, for now, average about 200 million. Definitely, what we have in terms of facilities will not take that 200 million because the economy is not expanding. So there are a lot of issues. So the first thing is that people have to have trust that government will do ABC. They just have lost trust in governance. Okay. So as a government, you pick one thing and say, let me do this and let people trust me. For example, if they can pick just power, okay, and fix power, even if you have power 18 hours a day, not 24 hours, you see a lot of difference. Because research shows that if power supply increases by 1%, GDP will increase by about 3%. Okay? You will now generate jobs. The power issue is a big problem for us. The countries we admire, they run 24-hour power system. So factories run 2-3 shifts. So they employ more people. No country develops based on generators. Okay? So just to fix, if you fix power alone, Nigerians will say, oh, this government is serious. Then you now win their confidence. Then they can wait for other things that takes time.
Because power alone has driven a lot of multinationals.
Exactly. They're now located in neighboring countries. Yeah. So we are losing jobs.
And I think this will also affect the issue of insecurity because that's
it's security and everything.
Oh, yeah.
So
that's also
you fix that power, you also self-security. Okay? If you can, I'm just saying 18 hours only, so that companies can run even 2 shifts. You see a marked difference.
All right,
All right.
Prof. Yeah, we'll just take a break now. When we come back, we'll continue this conversation. Do stay with us. It's Business Morning on Channels Television.
All right, you're still watching Business Morning. We still have Professor Akwan Ekpo here, and we're discussing the state of the Nigerian economy. Professor, thank you for staying with us.
Thank you very much.
Yeah, so one of the speakers in the report we listened to alluded to policy choices and non-clarity in policy as part of the challenges in the country. Do you share this perspective?
Well, partly, but let me say that the policies we have, the government has in place, they are good policies. It's a question of implementation. So, in terms of what's the other issue of what do they call the policy?
The policy clarity.
Clarity.
Yeah.
I think, in my view, maybe because as an economist, the policies look clear to me. For example, take the economic sustainability plan. It's very clear. And that plan, the attempt to implement that plan partially help the technical exit from the recession. Okay? Take the poverty initiative document. It's clear. Because they're done by experts. Okay? But how to now translate that into practice becomes an issue.
So that the average man can actually
in several fronts. Yeah. Okay? Well, I said earlier, we run an economy where we believe so much in the market. Okay? So certain things, even if the executive branch has good policy, it has to clear from the legislature to do certain things. This thing takes time. Okay? No question, some policy matters. If you want the so-called common man to understand, you can have what they call a citizen's guide to those policies so they can understand it. Okay? Not clad them in technical terms, I agree. But what is the policy in terms of giving Nigerians water, light, good education, good health system? The COVID-19 exposed our health infrastructure completely. Okay? Exposed us completely.
And most other countries.
And most other countries. Not the right one about. Yeah. Okay? Yes, most other countries. But a country like Nigeria with our revenue base and expertise, you will expect that somebody will not die in COVID because of oxygen. We had friends who died because there's no oxygen in the hospitals. In a country like this. Okay? That's what, sometimes oxygen in hospital, no oxygen. I don't get my point. So there are a lot. So certain things, policy clarity, fine, but some are just so basic. Okay.
Perhaps one of the things they also mean there, because I remember speaking to the manufacturers at that period, there was a fund allocated for the manufacturers to help them cushion the impact of COVID-19.
Yes, of course.
And they complained of access to
it.
That is, so perhaps it's not just about clarity, but actually the process.
Actually, you made a very good point. There are for example, a lot of intervention by central bank, a lot of intervention, but people complain of access. That's what we should look at. Why are they not getting these funds? A lot of interventions. For example, in our economy, we are talking about creating jobs. The manufacturing sector in Nigeria contributes less than 10% to GDP. For any country to make progress, that sector must contribute at a minimum 35–40% to GDP. We are at 10%, the time lower. Okay? And what we call manufacturing, if you look at it closely, is packaging, bottling, and what else? You know. Okay, so there's nothing wrong. You can add value to it, the value chain, but you have to find something you say, this is actually made in Nigeria from start to finish. Okay? So we package, we bottle, we assemble. Okay? So these things have to change. Government has a policy that diversify the economy. Yeah? That they confuse diversifying the GDP from diversifying the economy. They're not the same. Okay? That's why for me personally, each time oil price go up, I panic. Because when it goes up, it's that we relax. Money has come. Oil has destroyed the economy, let's be honest. Because we've not used it well. Other countries that have oil like us, go and see what they've done like Norway. They say we have this oil money. Oil is a wasting asset. We finish one day. So we use oil to build our infrastructure. We use oil to build our educational system, and so on and so forth. So the day oil goes, we know that we've done something. We didn't do that.
So now it's
and
about
we're not
use.
doing that.
Yeah? How we're using these funds.
Yes. How do you use it? Okay. So that's why personally, when oil price goes up and say more revenue, I panic because I don't want to go up so that we can be forced
That
to think
to look other
to
way.
look other way.
Okay,
You
so
know, so
the Nigerian Central Bank, just like other central
yes.
bank, they're taking part in trying to stimulate the growth rather than the primary mandate of inflation targeting. How would you say the Nigerian Central Bank has fared in its inflation targeting?
Well, I don't know about whether maybe I'm off. Are they targeting inflation because central bank where they target through monetary aggregates? Okay, I don't think central bank has left its major mandate. It's the nature of the economy. Central bank has, apart from price stability function, they have what we call development functions. Okay, so when the economy is not doing well, they intervene in that user area. And what I like to call is that I like to put all that into what I've captured as unconventional monetary policy. Given the state of our economy, if not for CBN, perhaps it will be worse. Okay? Reverse intervention. What they should do now is find out why people are having access, why they're not having access. They say, okay, give the money, they give the money to banks to on-lend at less than single-digit rate. Find out why they're not getting this money. But they've done their best in terms of what I call unconventional monetary policy. Okay? You know, and given our economy, people think the central bank should do everything. Okay? And they're doing their best. And people forget that central bank is banker to government. So the government says CBN do this, despite their autonomy, they'll be very careful to say no. I'm not holding brief for them, although I used to be in the board some years ago, CBN board. But they've tried, but they should find out why people are complaining about access. You know? Because don't forget that banks are not in banking for charity. When CBN money goes there, it doesn't just lie down there. They use the money to make profit. So that could be part of the problem. I used to wonder how come commercial banks are making profit in the midst of a recession, in the midst of sluggish growth and recovery. Because banks make profit when the economy is doing well.
And individuals are not getting loans. Individuals are not getting
loans. Yes,
exactly.
So why are they making their money? Because they prefer financing short-term oil contracts and buying financial instruments, which the banks try to curtail. Okay? So with that, they don't. So if you put the money in the bank to on-lend, fine. But find out why are people still complaining. Because CBN is doing its best. I'm not holding brief for them, but in terms of their own part of the economy, in fact, for me, they even go beyond what they should be doing, but it falls within their development functions. So they've not negated the issue of inflation or whatever, because if you look at the NPC meets, and the last time they met, they took correct decisions. Let everything remain the same, and let the fiscal policy do its work. The only thing I think they should have done for me as an economist is that if you look at the anchor rate, the money policy rate, and you remove from that inflation, our real interest rate is negative. Okay? It's negative real interest rate. Meaning that savings, there's inconsistency between savings and investment. So you look at that. What is happening to savings? What rate are you paying? What is the return on savings? If you look at the spread on savings rate, nobody will go and save. But the data confirms the theory that a real interest rate is negative, which means that we should be awash with liquidity, but that's not the case. Yeah. So they look into that. But in terms of what they are doing, I don't think it may not be 100%, but you cannot afford.
All right. But still looking at inflation, the United States inflation rate has hit a 13-year high.
Yes.
About 5%. And, this has raised, concerns in different countries. But how would this affect Nigeria?
It will affect Nigeria because the U.S. is like a benchmark, okay? If rates go up there, they affect you because you have debt in U.S. dollars. And inflation rate will affect those debts. So you pay more. And a lot of times you buy goods from America. So if the prices are higher there, you pay more here. So what we call imported inflation.
So how do we shield against,
It's difficult to shield because you can't be an island. So what you do is that for a country like Nigeria, you build your domestic economy. You make it strong. When it's strong, you can withstand global shock. Why is the entire Europe and the United States worried about China? Because China has built an economy where They decide what they want to do in the world. Look at the G7. What about China?
Yeah.
China is not worried. They've built an economy where they are strong, and you can't do anything to China. I'm not saying everything they do is right, but they've built an economy, and the world agrees that they've moved 700 million out of poverty in a short time. Wow. 700 million is a large number.
That's a huge number.
That's 700 million is the one telling the president, you can stay forever. Because they are comparing what they were before and what they are now. So if anybody can move 100 million Nigerians from poverty in 10 years, it will be a major development. If you go, have you been to China? If you go and see the poor, how they live there. So we should build an economy. We have 200 million people. The market is there. This country is so blessed. If you build a strong Nigerian economy, you cannot tell the world what you want to do. Then whether price go up in America or China, or you won't care.
You won't care.
Like Japan is doing or China is doing. You get the point.
Yeah.
Yeah.
When you have a weak economy,
then all those external factors
will now set in, and that make it worse for you.
All right. So
Okay.
let's talk about the issue of issue exchange rate management. Recently, the CBN made moves to convert rates by adopting the NAFEX rate. Where, from your perspective, is the CBN not getting it right when we're talking about
Well,
the
you see,
exchange rate?
I would say the CBN is not getting it right. The CBN has said they're doing a managed float.
Yes.
And that's what they should do, manage it. Because for one good reason, the foreign currency like the dollar is not your money. So when you think you have enough, you don't have enough. And for us, it is dependent on sale of oil. Okay? I said earlier that the oil price has gone up, but people are not buying. So CBN is managed float. So they look at the market and then decide when to intervene. Because if you allow demand and supply to fix the exchange rate, they now become useless. Because anytime demand exceeds supply, the value will go up. So CBN watches the market and then they intervene. Okay? Managed float is the way to go. Okay? The other way to go is to let the economy be diversified through industrialization. If the economy is industrialized, people will be producing, will produce for exports and earn foreign exchange, not exporting crude petroleum. Produce for exports, non-oil goods, and earn foreign exchange. Then the oil becomes irrelevant.
And the world is actually going green.
The world is going green.
So,
the world is going green.
Unfortunately, even our trade deficit, we still have trade deficits that was released just recently.
So there's slight improvement in non-oil export, but it's very marginal.
It's very marginal.
So that's how you get it. In my own, we are economists and we have different tendencies. Okay, some of us, someone like me, I don't want to be arrogant, but I'm an economist because I have degrees in 3 degrees in that area. I don't believe that the market can determine the exchange rate for a country like Nigeria. That's why I support the CBN's managed float. I said the dollar is not your money. So when the CBN even says they have dollar to finance imports for 6 months, it's provisional. If the oil prices drop, we're in trouble. But the country where when oil prices go up, more money we spend more. When it comes down, we borrow to spend. So, and this regime tries to change that. That's why partly they're unpopular. Yeah. Try to change that trajectory. So the Nigerian economy is not doing well, not because of the average Nigerian, let me say that, because the elites who have captured the state use that in their interests and that of their families. That's the bottom line.
All right, thank you so much, Prof. Thank you for sharing your thoughts with us on the state of Nigeria's economy on this Democracy Day.
Great to have you.
And enjoy the rest of your day. Professor Akpaniko is Professor of Economics and Public Policy at the University of Uyo in Akwa Ibom State. Well, over now to the markets, we have Anite standing by to give us what happened last week, cherry picking in the equities or what's going on in the FX markets. Anite.
Good morning, Ini. Yeah, well, let me start first by telling you that financial markets in Nigeria are on holiday. That's a continuation of the declaration of the Democracy Day holiday announced by the federal government. So, but what I'll be giving you is just a review of the performance of 3 of the markets. They're trading last week. So we start first with the currencies markets, Forex markets. We start with the NAFEX. It was up 0.12% at 410 naira 25 kobo. So that's against the 410 naira 74 kobo, which it traded against the dollar in the previous week. So we had a bit of reprieve at the of the naira at the NAFEX, that's the Nigeria Autonomous Foreign Exchange Fixing. But when you look at the performance at the Bureau de Change market, it was down 0.77%, which is it fell to 498 naira 80 kobo. So now that shows you that the naira is still, I mean, the dollar is still high, although it had risen to about 500 naira sometime last week. But we're doing a week-on-week contrast. Now, when you take a look at the INE window, the transactions there, volume of transactions there was down by more than 20%. And then, of course, the value is over $537. But if you look at the amount at which the dollar or the naira is trading against the dollar, as at last week, it closed at 410 naira 80 kobo. So now it's still taking, the naira is still taking a bashing against the dollar. So, but when you take a look at the total volume of transactions across the spot forwards futures market derivatives, it was down by 35.62%. Again, I say in contrast to last week's, to the upper week. But this is as of June the 11th, 2021. So now it just shows you it was just at the forwards market that we had a bit of positivity. So, but let's cross over to my favorite market. Well, no, this is not my favorite market. The FMDQ, that's the debt market. We had lots of some bearish sentiment. It returned to the market. That's because investors were demanding, investors' demand weakened due to expectations of higher yield. So, and we had not much of transactions there, just about 17 deals worth about 61 billion naira. So in the coming week, the investors or traders, I would say, are expecting that the release of the May inflation report by the National Bureau of Statistics, that is supposed to come on the 15th or 16th, if I check my calendar very well. But later this week, we should be expecting that. So that should be having some kind of effect at the debt market. So now let's cross over to the Treasury bills market. Also, not much, well, it was a bullish activity there. And this follows the demand for mid and long dated OMO bills, and as well as the increase in the interbank market on Wednesday. Don't forget, last week, the central bank conducted its primary market auction, and they allotted about 91.27 billion naira worth of instruments, and that's across 3 tenors. So, and then also, analysts are expecting that the projection of average yields on the Treasury bills will, will spur the market. That's despite tight system liquidity. So now let's cross over to not much of activity across board there. So let's cross over to the Nigerian stock market, which has managed to sustain the month of June positive. We were, in the previous week, we were up 1.23%. So now, last week, as a Friday, or for the 5 sessions last week, we had a bit of profit-taking and bargain hunting. But at the tail end of it, we were up 1.11%, and that translates to more than 230 billion naira gain at the market last week. Check the equities cap. It's still above the 20 trillion naira level, which it regained almost about 2 weeks ago. And that's, of course, is because due to the cherry picking of some choice stocks by investors. And, of course, this is because of some of these stocks are attractive. They're attractive for investors. And then the insurance sector was the only laggard there. It fell by 4.12%. All the other sectors were in the green, and of course, we're expecting that the market should be in the up when we resume on Tuesday.
Yeah. Well, we do hope it's in the up, as is your favorite market. So we'll give it a smile on your face.
It remains. It's the barometer of Nigeria's economy. But let's continue to see how that plays out.
Sure. Thank you so much, Aniti. Well, Well, we'll take a break now. When we come back, we'll head to London. Just stay with us. You're welcome back. You're still watching Business Morning on Channels Television. We head over to London now where Juliana is standing by. Hello, Juliana. Good morning. So
Good
the
morning,
G7 summit ended yesterday with a promise of 1 billion COVID vaccine doses to poor countries. What are the other takeaways from the summit?
Well, I think the main takeaway is that the Western alliance is back, different, more united than ever before. Of course, this was the kind of first big gathering since diplomacy became virtual. There was a lot of elbow fist pumping, lots of drinking late night on the beach in Cornwall. And so it does seem as if there is a camaraderie. I think some nations may differ on their stance towards China. Of course, the US and Japan stood together in trying to take away some of the shine from China. So that was a good thing. I think a question of delivery hangs under many of the big promises, one of them being what you were just mentioning about the 1 billion vaccines that they will be donating to poorer nations. 1 billion is good. They said they'll do it within a year, though the World Health Organization says 11 billion is needed. Lots of talk and rhetoric about climate change and other matters. But it's all, you know, at the moment, talk. We'll just have to wait and see. Of course, they're all in NATO at the moment in Brussels for that very important summit. And then everybody is going to be looking towards G20 when Russia and China are around the table. Because until they're around the table, we're not sure whether or not what the G7 have to say really matters in today's world.
And all eyes on US Fed meeting on Wednesday after the inflation yesterday. What are the market's expectations and how are they reacting at this time?
I think markets are anxious. Lots of people, lots of markets and economists around the world have been really concerned about inflation and where this is heading. The economy, even though the global economy does have some uncertainties for the rest of the year, I think a recovery is very much on the way. But this ultra-loose monetary policy that not only has been the shape of US economy, it has been the shape of the entire world. So I think even though a lot of Fed members have been playing down the risk of tightening policy, I think people are still going to be concerned. I don't think they expect rates to be changed, but they're certainly going to be reading all the fine details in the minutes about what is going to be happening with inflation.
And talks of possible delay in the easing of the COVID-19 rules. How is that shaping out the outlook for the week?
Yeah, massive talk. Lots of very angry business owners, particularly in hospitality, nightclub industry, wedding venue owners, really not happy about what we're expecting to hear from Prime Minister Boris Johnson at 6 o'clock, saying that Freedom Day, which was to be June the 21st, is now going to be moved to the 19th of July. Lots of talk about whether or not business rates are going to be extended and whether there'll be more support. Got a busy data week this week. Unemployment data due tomorrow, currently at at 4.8%, expecting that to fall to about 4.7%. Inflation on Wednesday, currently at 1.5%, expecting that to pick up at about 1.8%. There's one more. We got retail sales. They surged to 9.2% in the month of April, expecting another rise to about 1.5%. So you'll be keeping me busy as always, Annie.
Yes, I know that. Thank you so much, Juliana. Well, enjoy the rest of your day before Business Incorporated, that is. All right, so now we move over to the crypto space. Ladi, Elon Musk says that Tesla will be back to receiving Bitcoin when there's clean energy in the mining. And I'm wondering who will change that? Who will pick up the clean energy?
Well, I don't know how that's going to happen, but you know Elon. When Elon starts tweeting again, the market starts to react, and traders are not really, having it with Elon this past few days. He's been getting a lot of heat on Twitter from, analysts and traders. But let's see, it did make Bitcoin start the week on a positive note with that tweet there. See Bitcoin $39,178 this morning. Ethereum. So most of the markets are in the green. Looking at Coin 360 heat map. Fear and greed index, we have 28 points. Fear. That's today, but it's better than last week, because last week we had extreme fear at about 23. So there is some, good lack of fear actually going down in the market today due to these little greens that we're seeing. Market cap, $1.64 trillion, up about 8.99%. 24-hour volume traded this morning in the total crypto market, $94.27 billion. And Bitcoin dominance is still inching up, 1.30%. Wonder what that means for altcoins. Now let's look at Ethereum. Let's look at the charts now. We see Bitcoin is still trying to get to this 200-day moving average on the one-day chart. If it crosses there, clear way for 50K if that happens. But you never know, it could hit this resistance and fall back again. So it remains to be seen if this uptick can actually be sustained. We still have the MACD cross there reaching up to the top histogram. The RSI moved out from the oversold region. If it gets to the overbought, we might see a pullback, or we might see Bitcoin still inching higher. Ethereum, $2,500 this morning, up by 7%. 24-hour volume traded, $26.99 billion traded in Ethereum this morning. Let's look at the top alts by market cap. They are all in the green this morning. BNB up 7.55%. Cardano up about 7% at $1.55. Dogecoin. Elon Musk is not really talking about Doge, so Doge is still there at 32 cents, up about 4.47. XRP is still trying to break that $1 mark again at up about 6.32%. Let's look at the top 5 gainers now. Phantom is back in the top gainers, up 19.29%. The graph 71 cents, up 19.28%. And we have Tether. Tether has been doing well, and T-Fuel as well. T-Fuel was up most of last week and today. And now Tether is back there, 18.77%. And we have AMP at 6 cents, up 17.07%. And Aave, $315, up 16.38%. But you look at the top losers counter, you see now that the stable coins are the ones in the top loser counter. That shows you that the money is moving away from stable coins. That means traders are now having more appetite to get into the altcoins and Bitcoin, since we have that uptick coming. So we have HUSD down by 0.01%. So all stable coins are down at this moment. Shows that the market is getting ready, but you never know. I've noticed that Tuesdays can be a bit tricky in the market. So Tuesday is the day to watch for me, Ini, because
Nadia, I thought it was Fridays. Fridays you only have a sea of red.
Fridays, I noticed Fridays too. You can have a red Friday. Most of the time we have red Fridays, but Tuesday in particular. And now that Bitcoin is on an uptick, anything could happen.
Yeah, well, let's hope for the positive one. All right, thank you so much, Ladia. I need to wrap on the program today. Thank you so much for watching. But don't forget, there'll be more updates for you on developments in the world of business by 1:30. That's on our Business Incorporated program. Thank you so much for watching this morning. Do join us then. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.